But I think there is some sort of component of, do you want this to be a maximally decentralized exchange in terms of not like the speeds and feeds of it and the functionality, but like of the jurisdictional basis? Or do you want to bet it all on the US right now?
How do you reasonably see the market accepting Hyperliquid in the $100, $200, $300, $400 range?
We're just continuing to hear this administration be champions of not just crypto, in particular stablecoins, like for the long haul. And so I'm just curious what your macro view is over the next 1, 2, 3 years.
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Vance, welcome to the show, man.
Good morning, guys. What's going on?
Dude,
Morning.
Welcome public forums are back.
What's going on? Yeah, no, we have to
public forums.
All the stablecoins.
I mean, we had that layer 0 wormhole thing a couple weeks ago, which kind of like was like, okay, DAO governance is coming back a bit, but now it's like, all right, we've got some of the largest DeFi protocols and institutions in the space bidding for a ticker in public. I mean, it gives you something to live for.
I know. Gives you a reason to get up in the morning. It's I mean, it's great to see everyone putting their proposals forward. I think no matter what, Hyperliquid has already won, and kind of whatever happens, Sky is going to be building there, and just the opportunity set has really been revealed to be massive. Like there's $5 or $6 billion of USDC in the bridge, and I think for a lot of startups, this is kind of a make or break moment. Like they either kind of get the 5 or 6 billion or they don't. But there's a variety of other players that, you know, I thought the native markets proposal was really good. And like, you know, that's kind of an option if you really want to be native. And I think, you know, the framework for thinking about these things is you probably want someone that's either really aligned in native, like native markets, or you want the best absolute deal, which we think is Sky, obviously. But there's all this detail and stuff that's getting lost in the middle in terms of, you know, even things like, okay, why should the stablecoin be Genius compliant? Are we sure we want to put all the eggs of the Hyperliquid basket, you know, right there at this moment? And even for people who, you know, like I'm not going to disparage the other contestants as I tweeted, but people that are just so small where it's like, look, if your stablecoin has less volume than Mudang, like it can't really be a serious proposal. And like if they're to win this, I think, you know, Hyperliquid should get their tokens or whatever upside they're here to offer. But there's a lot to consider.
Yeah. So Vance, maybe just taking a quick step back as the current work that you guys have done in the Hyperliquid ecosystem, or just broadly your investment and interest. Obviously, this is like one of those no VC. This is like the epitome of the anti-VC movement that we've seen, right? And I'm not going to single you out here, but that's kind of the whole community vibe of Hype. Obviously, you know, you're then forced to buy on open market, participate either in the EVM, in investing into the early stage companies, or just being a large Hype holder. Generally, like what is Framework's involvement right now in the Hyperliquid ecosystem? How do you think about the project? And then, yeah, I mean, I'm sure we'll get into some of the nitty gritty here.
I think it's also important just to say, like, what is the relationship with Sky? Because that is another angle in which you guys are approaching this.
Yeah, maybe do Hyperliquid first. So we have a lot of Hyperliquid as Framework. Not going to really get into like specific dollar values, but I think at one point, you know, we checked and we're like top 20. So we have a lot. We've also incubated one of the top market makers on Hyperliquid. So, you know, our interests are represented in multiple different ways across Hyperliquid through owning the token, through being one of the people who've incubated one of the largest traders on Hyperliquid. And so I would think that is kind of our involvement. And I would also say our cost basis for the Hyperliquid is not $50, like a lot of people who've just been buying over the past couple of weeks. Like we've been on this for a while. We've also got prominent team members like Rajiv, who are contributors to the open source Hyperliquid ecosystem, and we're proud of that. So I think that is kind of our current involvement. And I think going forward with things like HIP3, you know, we do have enough hype to create our own markets. And we have the ability to not just be a venture capitalist, but also use our arms and legs of our relationships network, the market maker that we incubated to actually really drive home a lot of change and a lot of progress for the ecosystem. So I think that's like the first thing. And I think a lot of the proposals that have come, more recently in terms of like expressions of goodwill or intent, we did the spaces today, but like, I don't think having like letters of reference written on Twitter for the first time in terms of like, here's who we are and all that stuff, like it kind of seems too late for that in some degree. So that's all I'll say about that. And then in terms of Sky, I think, Rune and us are kind of the largest holders of Sky. We're extremely active in the ecosystem, and people forget, but Sky does almost 300 million of profits per year. It has about an $8 billion balance sheet. We are the largest LP in a lot or most lending protocols within DeFi. And so we have a significant amount of weight that we can throw around. And all of that can be brought to bear for Hyperliquid. And like if the USDH ticker, whatever happens there, I don't think it's make or break for Sky in terms of us being interested in this ecosystem. We're going to come regardless, but that $8 billion is something that we can wield that not many people can.
Yeah. Yeah. And just one last kind of broad one, because I think we can make this really fun, is what is your take on the growth of USDH and the Hyperliquid's general move into stablecoins? I've seen tweets floating around recently saying that there's only a couple good business models in crypto. There's trading, there's stablecoins, there's exchanges, kind of like all three in one here. What's your take on why these stablecoin teams are really trying to win this, and just generally this direction for Hyperliquid? Like, what's the growth opportunity here? What's the 10x?
Yeah, so maybe just to dig into why derivatives are such good kind of sinks for stablecoins. Like, there's very few places that people naturally hold stablecoins. A centralized exchange is one of them, but a derivatives platform where you can margin with that coin is generally the best. And there's no surprise that the largest centralized exchanges have the largest pools of stablecoins. This is the first time where we've ever seen that kind of be flipped on its head, where a derivatives exchange that works on chain is a natural sink for stablecoins, but it's also a place where you can use those stablecoins to be composable, generate yield, and do different things that are accretive to the business model. And if done right, you're adding another $200, $300 million of buybacks or yields or whatever you want to call it to the assistance fund. And so it's not just an afterthought. This is kind of one of the two really proven out business models within crypto. And so, that's kind of, I think, the current opportunity. And, if it's 5 billion today and it can double its open interest, I would think that the stablecoin growth would roughly track that. So you're probably looking at anywhere from 10 to 20 billion, which at those levels is 500 million to $1 billion of buybacks. So like, if you're thinking about Hyperliquid as like a $500 coin, you kind of do need that other engine to be firing. And, if you really think about it, I totally get the Genius compliance stuff, and like, that's great. And there's 3 years for everyone to comply. And there's a variety of different jurisdictions throughout the world. As interest rates go to zero, which, sure as you are sitting there, they will go down. That opportunity also disintegrates if you are, an only Genius compliant stablecoin. And I think Hyperliquid should want much more than that for the stablecoin that they're working with. So that's kind of the opportunity. And yeah, I think over the long term, the stablecoin opportunity on Hyperliquid will be multifaceted. It will be multi-ticker. There will be a HIP-3 component. There will be a variety of spot quota assets that people can use, and they'll all have their own value props. So like, I get why this is so interesting, and it is awesome to see the community representation here. But getting the ticker is like the first inning of the first, it's so early. It's great to see, but there's going to be more to come from this.
Introducing Extended exclusively on Starknet, a next-gen perps trading platform live today. With 50-plus trading pairs from crypto to TradFi, you get the best experience on-chain today. Deposit in the community vault for attractive returns, EMV compatible, and engage in unified margin, spot trading, lending, and perps trading. Exclusively live at extended.app on Starknet today.
At the very least, it's been an incredible marketing campaign. The best since John Wynn put a trade on Hyperliquid.
Yeah.
One thing that I think is important is call out the unique value propositions of each of these proposals. This is what we've been trying to do. The last stream we had Nick from Agora, we had Sam from Frax, and we also had Bo from Paxos. And so one thing that stuck out, and it seems like the 100% or 95% plus of buybacks and revenue to the Hyperliquid ecosystem is essentially table stakes at this point. I noticed in Sky's proposal, there was 4.85%, where most other companies are offering 4%, which is just basic T-bills, some advanced risk management that can get some additional yield and potentially more. But what really stuck out that looked unique was that Sky can provide 25 million in capital to create an independent Hyperliquid star. I'm not entirely sure what a star is. Maybe you could help unpack what that is on Sky and how that could benefit the Hyperliquid ecosystem beyond what some of these other proposals are offering.
Yeah. So look, the math on Sky's proposal is about 112% rev share, and like the whole idea of like I'll give you 95%. You are earning money from the stable coins that you're being given. I don't think that really should be kind of the goal here, nor should the goal be strictly SOFR. Like if you want SOFR, there's a bunch of protocols that can go put these coins in T-bills for you and hold them in State Street. That's basically kind of what I see from the other proposals. And so like what Sky is proposing specifically is something that as SOFR goes down, will not just track it, but beat it. And the reason that it's able to do that is a variety of things. Number one, it has a way of allocating capital through stars, and we'll get to what the Hyperliquid star means, where Sky is generating yield from T-bills. It's generating yield from the Ethena basis trade. It's generating yield from Syrup USDC. It's generating yield from AAA, Janus Henderson, CLO ETFs. The diversification of risk collateral and the ability to beat SOFR should be table stakes, not just 100% SOFR. And then I think kind of the next point on the star is kind of like, you know, if we weren't going to vote for Sky, we'd probably vote for native markets for this reason, which is the stars of Sky. And, you know, I know for people who are just learning this terminology, it could be a little corny, but bear with me. There's a star called Spark. And if you want to check it out, it's data.spark.fi. Spark manages about $3.6 billion of the $8 billion balance sheet of Sky. And they make about $110 million a year of run rate profits. And that is directly cycled back into the ecosystem, which generates more yields and more risk capital. And so really, like if Hyperliquid is looking for a DeFi partner that can inject serious amounts of capital, risk capital, and earn yield on that, that is what the Hyperliquid star would be. And so that Hyperliquid star would also have its own token, which would be farmed out to Hyperliquid users, which would give it some of that nativity and community upside that the native markets proposal has. And yeah, I mean, you know, the hope is that we can cover all bases here. And if we don't win USDH again, we're still coming. But this is what Sky has to offer in terms of not just, you know, SOFR plus, but also real tokens that are in the community that are going to have tremendous upside.
Got it. You mentioned earlier that you guys are about somewhere in the top 20 in terms of holders. Are you guys also staking and running validators and therefore going to be voting on this proposal? And if so, how does your voting, like earlier before you came on, we were talking about CL207, who said publicly he controlled about 15% of the voting power. And he
Hyperscan does. Yeah.
Hyperscan, exactly. And he would like, you know, Van Eck's proposal given to him as a cat. But you guys you know,
a direct quote tweet of Jan Van Eck, the CEO of Van Eck, a direct, absolutely ratio too.
We're not going to explain things to you as a cat, but I'm curious, like how much voting power do you guys control if that's publicly available? And yeah, I mean, where do you see the other validators? I'm sure you have a general understanding of the landscape. How do you see these things shaking out?
So I don't think we've disclosed how much hype we own. It's significant. And the validator list, I've seen it. I can't, you know, mentally calculate what's been, you know, delegated to them, but it seems like a lot of hype, and we would be a minority of that, you know, in the scenario where we are delegating to that, you know, validator set. So I don't think, you know, we have enough hype to sway the proposal on our own, and that is not really our goal anyways. And sorry, the question was, you know, how are we going to vote?
Well, I think you've made it clear how you're going to vote. I was curious how you guys were positioned, if you were running validators yourself, and if you had a hype position that was significant enough to make us, you know, a material impact on the vote.
We have enough hype to create a HIP-3 market, you know, minimum, which is, you know, some sort of guidance for you guys. And in terms of, you know, us whipping the vote, our process is, look, like we just want to explain our proposal. And I think we have put the best economic terms on the table. They're different than everyone else's, but I think no matter what you think of it, it's an interesting proposal. And so the hope is that, you know, it's not just kind of like we offer $25 million and so someone offers 26, or like, that type of thing. I think the best thing for the Hyperliquid community would be to consider the proposals on different dimensions and decide what they want. Do they want the most interesting, max value in terms of like they think Hyperliquid's going to go to $500, but they need that stablecoin engine to get them there? It's probably Sky. Do they think that Max Vij and native markets are really, really bullish and interesting and can kind of provide that next huge community airdrop? Probably go with them. But disparaging people, trying to FUD people, that's kind of not our strategy here. And again, whatever happens, like we're coming.
Yeah. So I'd like to ask you about some of the stuff that's in the Ethena proposal, just to get your perspective from the Hyperliquid community perspective, less so the I want to kind of see Sky win perspective, which is how valuable do you think Ethena committing anywhere between $75 to $150 million in incentives for HIP3 front ends, as well as launching this USDH being backed by USDTB, being like how important are those two specific things to the Hyperliquid community? Should we value that more than other parts of their proposal?
Yeah, not to beat a dead horse here, but I don't. I think the Ethena proposal is top, 4 or 5. I would say the best ones are kind of Sky, Ethena, native markets. I think Paxos, has managed a large one. Like those are kind of like the ones that are kind of table stakes. Agora as well, just because of the Van Eck backing. Again, I don't fully. I think so. Like maybe one way to think about USDH is. It should be a wrapper that has compatibility with multiple jurisdictions. In the same way that Hyperliquid validators are based in a jurisdictionally distributed way, you should probably think about that for the same context of the stablecoins that are underlying the exchange. And there's a couple of reasons for that. I mean, one of the ways that Hyperliquid does not go to $500, it goes to 0, is there's some sort of bridge hack. There's some sort of jurisdictional seizure. There's some sort of accounting issue of the stablecoins on that bridge. And I think one of the most likely vectors that I've personally experienced is when USDC depegged because Silicon Valley Bank went down. And so like it's not just a theoretical experiment. And I think this is maybe one area where there's no Hyperliquid mission statement, but I think there is some sort of component of, do you want this to be a maximally decentralized exchange in terms of not like the speeds and feeds of it in the functionality, but like of the jurisdictional basis? Or do you want to bet it all on the US right now? Given that Tether, the largest stablecoin in the world, has not even launched in the US yet, I don't know why today would be the time to make that decision.
Very, very good point. Yeah, interesting. Well, that's been kind of the entire community vibe around Hyperliquid has been this kind of, I mean, you could say it's about no KYC, but really it's just about this. They've kind of not played by the same rules as everyone else, you could say, or they've kind of engaged in a very, very, new way of launching a perps in terms of their validator architecture, as well as just the way that they've operated within kind of the broader KYC and perps rules. But then at the same time, we've seen the US kind of become far more lenient in the past few weeks. So
it has, but I will say, like when you're running a stablecoin, if you're short by even $10, that's a huge problem. You kind of need to like wind up the whole thing and turn it back over and figure out who's owed what and wind it down. And jurisdiction seizing stablecoins is something that has happened before, both at the bank level and at the stablecoin level. And so again, like think about the stablecoins that Sky produces. One is DAI. It's the largest decentralized stablecoin in the world. It's only backed by ETH. I think there's 3 billion in existence. But that's for a segment of people who just say, like, I want the fully decentralized, like, Ayn Rand version of the stablecoin. And then there's another one, which is USDS, which is, a generated asset by Sky that is primarily used for lending. It does have a blacklist function, so it can be more compatible. And so like the idea of the Hyperliquid stablecoin should be probably designed to be somewhere in between those two, and not like all the way of like, let's just give State Street all our money. I don't think that's really where we are today. a strategic move to give all of our, communal money to just the US. I'm not sure that is the right path, but it's certainly one that can be explored with something like Sky, where, you're creating an asset that has, varying functions, not just being Genius compliant.
Yeah. So we ran the math on this, and I think it's somewhere around $200 million of profit a year or so, up for grabs should the $5.5 billion of USDC that is on Hyperliquid today earn the current, short-term interest rate around like 4.5%. When you're looking at the actual path to Hyperliquid to something like $500, and kind of trying to articulate a thesis around how this thing could grow really at 10x in price from here and 10x in market cap, price predictions and whatnot aside, generally, you've mentioned a couple of times about how you feel this stablecoin piece is important, or at least the community could see it that way. How do you reasonably see the market accepting Hyperliquid in the $100, $200, $300, $400 range? If next year, the following year, 5 years, whatever the timeline or prediction is, we can kind of leave that out. But I'm just curious what you think the necessary steps for the market to accept, this token as one of the top 5 or top 3. Is that possible? How do you see this actually tangibly playing out?
Yep, and this is usually where I say not financial advice.
Okay.
I mean, look, right now, my personal calculations are, it trades at, $2 to $3 billion of earnings per year. And I see people using the circulating supply versus the fully diluted supply. I personally use the fully diluted supply. I don't even think you need to use the circulating supply because it's growing so fast. But, I think it can probably get to 100 just based on the perp volume that exists today. And probably higher. But if you want that rate change in terms of why are people just now buying Hyperliquid at $50, you probably do need another economic engine to turn on. That can be something like unit listing stocks, bonds, commodities, and allowing large leverage on it. That's certainly a path where it can get there. Another is HIP-3 markets really kind of take off in a different direction. Maybe options launch, maybe that's interesting. I think those are probably, other than unit, lower probability paths. I think the higher probability path is the stablecoins continue to grow in the bridge. You get to $10 billion of stablecoins that are earning 5% per year, and that's all profit. That's $500 million of profit that you can then add onto your existing earnings. And so there is a path here, I think, for it to trade substantially higher than $100, $200, $300, but it does need to have some sort of other economic engine than, just having laid out all the paths. Those are the ones that I can imagine. And again, if interest rates go down and you're a Genius compliant stablecoin only, who does that serve? And it's not, what I'm trying to say is not, if USDH goes to the wrong people, it's just this forever zero of earnings in the wrong way. The stablecoin war will be multifaceted, but you should kind of be rooting for someone who has a different approach, at least to take on some share of the stablecoins that are in that bridge and do something different with them. And part of it should probably be a very native team like Native Markets. And part of it should probably be a Genius compliant one. And part of it should probably be something like Sky. Yeah. And I think that is where we will get to. But the USDH beauty pageant is everyone gets to present. Everyone gets to show what they're doing. And I think that's a hugely constructive process.
I'm curious where you may see stablecoins going in the 3 to 4 year range. And I haven't really seen you tweet about this, but I have a feeling you might have a take where there was a video yesterday that came out of this Russian finance minister, I think, talking about how the US is going to basically, they have this $35 trillion pile of debt and they're going to try to use crypto to devalue it. And I'm curious if you think there's any validity to this claim, and if so, how do you see the administration progressing the stablecoin agenda? Besson has said that there's going to be 3 trillion of stablecoins, by 2028, with rates going down. How do you think this landscape shakes out as we're just continuing? It feels like on CT, everyone is calling, there's going to be one more rally and then everything's going to die. But we're just continuing to hear this administration be champions of not just crypto, in particular stablecoins, for the long haul. And so I'm just curious what your macro view is over the next 1, 2, 3 years.
Yeah. So I think the the Russian minister's comments were taken literally, and probably like a literal basis to understand that is not the right one. But I do think he has a point on a larger scope where it is, Bessent has laid out this framework of we're going to have 3% inflation. I think we'll get there. We'll have 3% in growth. I think probably we'll get there. And then we'll have 3% in deficits. And that is not where we're tracking today. I think it's more like 3.37 or 3.38.
Right.
And that's assuming no recession. And so I think what the Russian foreign minister is trying to say is that there is a debasement trade going on, and there is going to be a new home for this money, and it's probably not going to be bonds. And whether you read, Michael Hartnett, who's the Bank of America CIO, or you read Zoltan Pozsar, it's pretty clear the governments are just going to be printing more money. The debasement trade is just starting, and that's kind of running into this idea of like cycle thinking. And the reason that I don't like cycle thinking is not because I don't believe in cycles. I think the reason I don't the reason I don't like cycle thinking is because it kind of makes you like this imprecise person. It's like like people throw around words like, okay, like fascism. It's like, what does that even mean? Like, what does cycle thinking even mean? Like, what point of the cycle, what inning? It just like doesn't mean anything. What does mean something is that this debasement trade is starting, and it's not going to stop for a very, very long time. And what I've been tweeting recently is like the cycles that I can see them as of now are gold rallies, then stocks rally, then coins rally. And it kind of goes in a circle in terms of they search for their valuation ceilings, they search for kind of the risk adjusted return that they can get, and then they pass the baton. And unless there's a war or 500 basis points of interest rate hikes that are coming, I don't think that's really going to play out. And so I don't think the Russian minister is lying. I think it's kind of a little bit of, imprecise term to think about it with, but he's definitely right on some degree. The debasement trade is just starting, and the cycle thinking is probably not as relevant in that context.
What's funny though, guys, is I've found that each time that the crypto market heats up since 2017, the fiat is dead or fiat is hopeless idea resurfaces, especially within the small community. But each time that it happens, it's more and more real. Like it becomes more and more compelling of a situation like this time around compared to like in 21 it was what inflation and oh man, like we had this inflation rise where oh god, now it's like oh man, like stuff's breaking, things so there's always a more kind of compelling reason as to why the debasement trade is going to happen. And while I do agree with you, Vance, I think there are probably people out there, including Robbie and myself, who have done pretty well this cycle and will do well by taking some chips off the table. But we'll also, ride for the long term.
Yeah, I mean, maybe a different way to think about cycles and if you're building a capital base or if you're deploying a capital base is number one, you measure your net worth from cycle low to cycle low, not top to top. So that's the first thing. And the second is just for each cycle, you need to build a more stable capital base for the next cycle. And so, things like cash or things like real estate, where you can lever that up over 30 years, that serves as a very stable capital base, kind of a base of operations for you to go off and take risk. And so I think in that framing, in running it up and running it back, cycles are real. But at the same time, there is this whole idea of the power of staying put. Like if this podcast, framework, myself, like I've been in crypto for 13, 14 years at this point. It's wild. Most of my adult life, pretty early on, I realized that there were not that many people who are, really bought in over the long term to this industry and community, who are really intelligent and sharp and willing to work hard. And if you have all of those things, like there is no other place that is better for you to create wealth than crypto. Like people, they joke about, this is my last cycle. And my answer is like, where are you going to go?
Right.
Want to go get a tech
like what's the trade after the trade?
Yeah,
something we talk about a lot here too.
Like, and sitting on the beach is pretty boring. Like the purpose, the struggle, all of that stuff is what makes life interesting. Like, and crypto is generally the best place to express that, in my view.
I'm curious how that translates into venture investing. We've talked a lot about like a liquid bag, being hype. They'd have no VCs, right? So it's all liquid. But when it comes to venture investing, how do you think on decade timescales? Like, do you ever think like what is the likelihood that this thing really takes off? Do you have to have that mindset with every single deal that you do? Or is there a play where, maybe you get in contact with a founder, they have a great idea, but it's going to work on a 2 to 3 year time horizon. That's where your vesting is up. But on a 10-year time horizon, maybe it doesn't make so much sense. How do you play with the time horizons, given the long-term thinking and mindset that you just mentioned, but also with kind of the moment in space and the evolving metas at play here, where something might make sense for a time and place, but not so much on the multi cycle, if you will, time horizons.
Yeah, I mean, I think we have a long-term closed-ended fund, which I guess puts us in the category of VCs, but we play whatever game is on the field. And I think the worst thing that you can do across all investing is try to force it. And you can tell when you're forcing it. And I think, if you ever get that feeling, you probably just want to back off. Right. Our bread and butter is working with founders, whether that be in the liquid markets or the private markets. It really makes no difference to me. When FTX and Luna collapsed, we were primarily a liquid fund because we thought those prices were advantageous. We were trying to do things like we tried to buy Celsius, because we thought that could have been an interesting investment. And so there's a lot of things that just come your way in crypto that you need to be kind of moving your feet for. I don't know what the best sports analogy is, but just be ready, ready yourself for it. Over time, we've gotten better at founder selection. I started the firm with Michael. I think I was 26, he was 27. Nobody gives you a handbook for this stuff. And so, there's been capital that's been incinerated along the way. There's been bad decisions. There's been bad founders. There's been people who haven't even tried to start a startup that have just walked away with our money. All of the bad things that you can imagine have played out. And I think where we are today is the sum of all of those learnings. And so we get better over time. And forecasting the long term is, basically impossible. I think the best thing that you can do is get a pretty prescriptive vision of where you are today. And because crypto moves so fast, today you can extrapolate really quickly. Hype opened at 4 and went to, I think, 20 in the first 48 hours. And if you weren't buying on that first day, you kind of had to wait for the Trump tariff tantrum to buy. And, that's the other thing I think about venture investing in a liquid context is, when the Trump tariff tantrum happened, that was when we bought a lot of our hype. And I think about it in terms of, yeah, it was great, but it's also
we were shitting ourselves, Vance. We got in at $2 first minute on launch, just jamming it and just watched it all go down. And I was just,
those feelings are good because you do need to touch the stove to realize that it is hot in a lot of investing contexts. At the same time, you have to have this idea of the hardest day to invest for is today. There's also this thing where it's okay, after the Hyperliquid unlocks happen, then I will buy. It's well, you're talking about investing at a date in the future. Think about today, not really the future. It's kind of my idea. And if you ever see someone building real technology, you have to nurture those people. And I think that, Sky is a pretty good example of this, where they're building real technology. Maybe they're overlooked by the market, but just like a dog on a bone, not gonna let this go. We're going to build it. And through all the building and all the time compounding, that will be what makes the difference. But trying to do big ideas about the future, very rarely can that happen. I think, maybe a couple of people like Peter Thiel are capable of it, but certainly not me.
Yeah.
What kind of advice would you give to your 26-year-old self and Michael back when you were starting the fund, given all the lessons that
two future fund owners here? We've been, scratching our chins, wondering how to do this media VC thing. We've done one fund already with just our own capital, but the whole raising process, you're looking at two young bucks here.
Andy and I toss around a lot of ideas, right? So, and we're right around the age when you started Framework.
Look, go for it. First of all, I think second of all is, our first fund was basically our own money. We tried to pitch people, it didn't work. And the first fund I think was 15 with one outside LP. And I was living in Michael's parents' basement at the time. It's pretty much as dire as one could possibly imagine was the setup for that first one. And we launched in the first DeFi bear market and kind of just blitzed it immediately. So we did get, fortune, whatever, luck, skill, preparation, some combination. You got to look for things that move the needle. If you do have a Hyperliquid to 1,000 thesis, never let that go. well reason it, but like just be there. But you do need some sort of divergent perspective from the crowd, especially as you kind of get on to your second, third, fourth fund.
Appreciate the sage wisdom, Vance, and the time today. Looking forward to seeing the next, I guess, 24 hours or so of this Hyperliquid battle into tomorrow, which will be the decision date, I believe. And I mean, as you said, look, I think there's going to be obviously one winner for the ticker, but at the end of the day, the market's clearly signaling where it wants to go, which is more stable coins on Hyperliquid. Really, it's competitive to Circle. Circle is going to have to really, make a stance to get USDC native on Hyperliquid, as they've previously done for Ripple, Cardano, Hedera, and others. And so looking forward to kind of just watching this unfold, and also looking forward to Plasma's launch. We invested in that one, talked to Michael about that quite a bit a couple weeks ago. That one's getting close. So a lot of interesting times in the stablecoin space. And I hope this podcast changed your podcast current crypto meta view tweet that you put out about only talking about treasury companies or other stupid shit. So thanks, man.
Look, the bar to be bullish is extraordinarily low, and you guys are succeeding. So thank you.
All righty, Vance. Speak soon, buddy.
Take that as a compliment. Thanks, Vance.
Yeah, cheers, man.